Good morning. As is the usual, anything provided in these videos is for entertainment purposes only. I'm just a random Gen Xer guy on YouTube talking about trading. I'm not a financial advisor, and nothing I say or do in my videos should be construed to be financial advice of any kind. The majority of traders lose money trading. Trading is a very risky thing to do, and you are very likely to lose money, whether you listen to my videos or not. Getting that out of the way. All right, so here's what's going on. I'm still trading micro NQ. I do like the volatility. It seems to be a little bit. There's more money in the moves, but as you can see on the picture here, there's quite a lot of wick. So you have to use really wide stops and just kind of keep guessing that the direction is correct. I did decide I think I'm going to continue to use a little bit of martingale, not all the way up. I'm generally only going to use one micro, and I'm going to use like one micro. First position is 1, second position is like a 3 of reverse. The next one would be 7 reverse and then 15 reverse. And what I mean by that is let's say I'm in the beginning of the day, and this is the first bar, which it was, and I decide to go long off this bar, and then I get to this bar, and I see that prices tried to break out and is heading down, and so basically, at that point, I would have closed my position out and reversed, except I would have double reversed, so I would have gone with a short with 2 micros instead of 1, which would have been my opening long position. And then down here, probably I would have gotten out. And then essentially every time I get out with a profit, the whole thing resets. So I'm back down to 1 micro. So if down in here, if I had, see these moves were way too choppy to take. I might have taken a long here, in which case I probably just would have sat on it, but since it never broke this low. But anywhere in here, if I take a position with 1 micro and I find that I'm actually wrong on direction and it starts to go the other way, then I'll just reverse with 2 micros, which is basically like switching with 3 because you got to close the first position. So, and if that 2 micros is wrong, I might go up to 4, but I don't think I want to go any higher than that. Then eventually you just got to take the loss. So I can get chopped up using that, so I have to be careful to use a wider stop and kind of just, it's like I'm just making a directional bet, and it's better for me to hold through chop than it is to try to, reverse unless it's obviously reversed. Like if you look at this down here, this is a pretty strong bull bar that was broken higher than. So you could have gotten long in here, but then your stop would have had to have been below this bar, and you just would have had to ride through all this mess. And whether or not it would have looked like I should have reversed here or not, I wouldn't have reversed until I was just dead wrong, until it was below here. So, this was probably the best long signal, though, one of these two, like this one or this one here specifically. But like if I had taken a short here, which you really can't take this short just because of the strength of this move up, without waiting for it to, waiting for like the second short opportunity. But let's say I did take this and I went short with 1 micro. Well, at some point here, I'd realize, oh, I'm wrong. It went above my entry, so I'm going to reverse to long with 2 micros, and then eventually get out up here maybe, or probably more likely I would have waited for a longer move or not. I don't know. So I might have had like a break even or something. So it would have just been a break even out. But the general idea is that you're trying to just guess the direction, and when you're wrong, you just go the other direction a little stronger. Just not excuse me, just not a lot stronger. That's the main problem with this is you really don't want the leverage to get that high. So you don't want to actually use that kind of technique too many times. You want to have a limit to the leverage that you're using, certainly. Um, and you may also notice I'm on a practice account, so I definitely it's a little bit tilted. Was trying some DCA, some got in over my head a couple of times, so I'm not. I'm gonna wait at least a week or two before I reset the combine. So what I did is you can get a practice account in your Top Step and use that instead. So that's what I'm doing, and this is just from yesterday. So anyway, so that's what I'm doing for futures. Now, I want to comment a little bit on something that I'm doing that I just started doing. Let me move this over here. Stocks. So when I started doing this, I was much more interested in, you need to have this, you need to get skilled, you got to get really good. I'm going to trade one instrument, the futures, and just try to get good at it. And what I'm discovering is that's really hard to do. It's very difficult, and the market has so many different moods that one day it might be easier for you to trade, one day harder, and it really depends on your strategy. If you have a tendency to like trend following or mean reversion, or if you go back and forth, like I tend to go back and forth between the two, but I'm not always right. It can get really tough to guess what the market's going to do, and I think the indexes, especially because they're buy side, they have a tendency to not behave the same way when they go down versus when they go up, and there's a lot more instability when we're sort of like we are right now. We're heading into a period of time where the markets are going to have more and more reasons to want to go down than up. There's government shutdown coming. There's a lot of job issues with the job market. So we're probably headed into a recession if we're not already in a very mild recession. It's hard to say. Prices are out of control. People are having problems paying for groceries. There's all kinds of stuff going on, and so there's a lot of reasons for the market to want to go down. And so generally, yes, the market loves to go up for a long, extended period of time, but when it tends to go down, you'll notice that there's a lot more instability in the day-to-day price movements in the indexes because people aren't sure. There's a lot more, little bit of fear underlying a lot of stuff. And so trading index futures can get really squirrely when you start getting into like a bear market territory or into recessionary territory where there's reasons for the market to go down. The indexes can get really squirrely to trade versus when there's like a nice long bull run of 6 months of slowly increasing prices on the indexes. It's like almost anybody. Oh, I just bought this morning and exited at the end of the day. It's a very different story. So now the indexes do affect stocks. In the past, I have been, I don't want to say against stocks, but just sort of feeling like I had done it and I didn't want to do it anymore. Years ago, I messed around with penny stocks and stuff, and I don't know, I got to this point where I felt like it was dumb. And I never felt like it was worth trading stocks because I don't know. It just seemed to me like, well, the index is affecting everything. Why do you care what an individual stock does? Well, actually, stocks are a lot more interesting than I thought. If you go on YouTube and you look up Warrior Trading, the guy is legit. He's got some really interesting strategies that are really simple. If you're into using price action like I am, using his strategies along with sort of having an understanding of something like price action, you can easily, you can really make a lot of money doing that. It's a very, very different world than trading futures. So I want to talk about that a little bit. So what I've started to do is I've started to have to learn how to use the Thinkorswim platform a little bit more to actually do quick trading on it, which is you have to really play with it. I'm only messing around with stocks pre-market and post-market. Okay, so that's the first thing. The main reason I'm doing that is it's easier for me to catch stuff that's standing out because there's not a whole lot of things moving. But I don't have the time. I don't, I have a 9 to 5. So if I can find something between 6 and 8 in the morning, that's great. I'm in Central Time, so that's 7 to 9 early market time in Eastern. But so if I can find something Central Time between 6 and 8, generally I will, and I can take it and make 10, 20, 30, 40%, some basically a great trade, walk away and feel like I really made some progress today and be done with it. And then start my job. I don't have to, it doesn't have to interfere in any way. The futures trading, I can do that all day because it's a, it doesn't take a lot of cycles. It sits on its own monitor. I just sort of look at it, make a directional guess, put a trade on, and then I sit there and I check it every few minutes. I just eyeball it, and it doesn't really do much. But the stocks are a little bit more intense, and you really do have to kind of devote more attention to them, especially when you're finding something. So I want to talk about what I'm doing. Like I said, Warrior Trading on YouTube. He's got some great stuff. He is pretty well known for taking small accounts, starting with like, $600 or $1,000 or something, and turning it into like $1 million. He's made, I think, upwards of $20 million trading stocks this way. So it's a pretty impressive strategy. It's not very scalable. You can't turn it into $1 billion. If you wanted to make $1 billion in stocks, you'd probably have to switch to Qualmagi's strategies and take more swing trades, things that you can get in and out of a little bit easier with larger positions. But if you're starting off small and you want to get to $1 million, definitely Warrior Trading is the way to go. I think it's much faster and easier to do that with stocks than it would be with something like futures trading. I'm not going to give up the futures trading. I like doing it. I am interested in the skill aspect of it, and it helps me continue to refine my reading of price action and understanding of market movements. But the stock thing is quite interesting. So here I've got a stock scanner. If I just sort of explain these sections here, I'm looking for stuff between 75 cents and $10. I adjust this up and down. That's fine. I want to see some volume. Start with at least a real small market cap at a minimum. I don't want to see stuff that's too tiny. The most important thing here is the shares, which is an inaccurate, but it's the only way in Thinkorswim to see how many shares are outstanding on a stock, and that's it's not the same as the float, but it's close. So generally speaking, I see it tends to be twice the float. So what I'm doing is I'm finding stuff that's low float, that's under 30 million on the shares value. That should be good enough to find stuff that's low float, and then I basically sort by volume, and I hit the scan button. And you can't tell right now because it's not live. I wish I should probably do this live one morning, but it becomes immediately obvious when you hit the scan button and you just look at stuff, what's hot and what's not. And the way you can tell on this is that the volume number is rising rapidly. You have a scan list like this. It'll be, okay, let's say if I'm talking Easter time, and say it's just 7 in the morning, which I can't trade before 7, I don't think, on Thinkorswim anyway, but I give it 5 minutes, or I give it a few minutes, hit the scan button, and I see a list like this pop up. Small stuff, I don't care about it, there's nothing going on, and you'll notice that, like as it is right now, the volume numbers may not be changing. So it may just be that somebody adjusted the bid and the ask, somebody hit the bid after hours with something, with a small order, and the last price magically went higher. Okay. So that's not really what we're looking for. What we're looking for is stuff that's just flying off the shelves. And again, what you can tell is you'll run a scan like this and you'll sit and watch it for a second, and you can see that one or two of these will have this volume number just climbing rapidly, like everybody's pouring into this thing. So then the next step I might do is I might right click and do a more info and do a company news. And it shows up on the left over here for some reason. CMMB, so here's a little news ticker, and I'll notice, oh look, I see there was news that it was like a month ago. Who cares? So there isn't any like impacting news occurring on this, and so I don't care. And I would basically go through that list, anything that where you could tell that the volume was rising rapidly and that people were dumping money into it. They'd be looking for news. Now, the one that I saw last night, this was after market close on Friday, was JFB. I put that in the little news thing, and it's not going to work for some reason. That's weird. JFB. That's odd. So anyway, when I was looking this up, it was back in back here somewhere, or was it? Yeah, I think it was like back here. So I saw this on the scanner. It was back at like 8 or 9 or something, or maybe it was in this pullback, but and it was clear that there was some pending news on it. It was like, it might have been earnings, it might have been something else. It doesn't really matter. What matters is that there's a news catalyst that's not something stupid. It's not like, here we're offering shares, but it was something, hey, this sounds like this company might do great because of this news type news. And the volume was just out of control. I mean, it was just every second you could see the number building up and building up and building up, and that's what you're looking for. So that was after hours. I saw it in here. I took a small position and then got out because I didn't have any settled funds left for the day. But this is an example of what can happen where it just goes and goes and goes. I mean, this kind of stuff is ridiculous. I wasn't even aware that small caps did stuff like this and that they were this easy to find with the scanner. So once you get used to that, it's a couple of things you have to check. The news, the fact that there's good news, that's really important. Another thing to check is to go back to the daily chart and take a look at it and make sure that it doesn't look like one of these things that is on a permanent downtrend, or one of these things that's always flatlining and just has these spikes and comes and goes. Like those are like pump and dump stocks, or things like small caps where everybody's just constantly shorting, and so any move upwards really isn't going to last. You want to kind of stay away from stuff like that. Like some of these Chinese stocks and things like that they're just a little dicey. But this is pretty simple. Price action wise, what's going on here? You got a big a big spike up, retracement, some indecision, and then a continuation. Boom, buy. Another one here, buy. You could have bought anywhere in here and held and gone all the way up. Would it have been that easy to know when to get in and to get out? Of course not. But because you're not going to be shorting, this is a stock market, you're generally not going to be shorting stuff you're going to be buying. This is what you're looking for. Could you have bought, like, say, right here, thinking it was going to spike higher and gotten hosed? Yes, you could. and you would have had to have been watching your position carefully. Like this would have been your stop, and you would have said, you know, shoot, I'm out. It's possible you might have lost a couple of bucks of shares there. That's going to happen. You can be wrong. On the other hand, after you get past about the third push up on something, you probably shouldn't be buying it. But anywhere in here, you could have bought and taken advantage of this. So basically, you want to get in early on the move and ride it up and get out. If it looks like if it's going sideways or it's not doing anything for too long, you just that's it. You're done. You want stuff that moves fast and moves up, and excuse me, and you can get in and out of this stuff if you have margin and you're over PDT limits, 25,000. Sure, you can get in and out of it a couple of times, do whatever you want to do. That would be ideal. However, I'm not trading with enough to be above that line. So what I have done is I have created a new account in Schwab for cash only trading. I contacted support and told them I wanted to restrict the account to trade with settled funds only, so that there was no way for me to go over my settled funds limit and cause myself a problem. I don't know why some of these platforms are set up this way, but they'll allow you to make mistakes like that. They'll let you hose yourself up with margin accounts as well. So I've got another account that's got margin on it that I don't even think the margin is that there's an actual margin as much as it's just a margin account. So the funds settle immediately. And you put a couple thousand in it and you play around, and you realize very quickly that you're going to run out of day trades, and you're going to run afoul of the rules, and then they're going to lock the account. And it's like, well, why is this set up that way? Like, why? This is 2025. Why are these things not more automated? Or it just seems strange that they'll let you make a trade that causes you problems, and then you've hosed yourself. Same thing with a cash account. If you, as I did yesterday, I made a trade at the end of the day on this particular thing, and it wasn't a lot. It was only 500 shares, and I was like, oh, I shouldn't have picked 500. I should have picked like 5. I didn't have that much settled cash, and it lets you go negative on settled cash, and then you've caused yourself a ding on the account, and they say, oh, if you do that more than 3 times, they're going to restrict you to trading, only stuff with settled cash. And I'm like, well, that's kind of dumb. I don't want to go outside of that. The whole purpose of having a separate account is that I only trade with what's in there. So anyway, so I had him turn on that restriction, so that's fine. So I'm not starting with a lot here. I think this is at about 1400, and I want to see where I can go with it. If I can catch a couple of good runs like this in a week and only have a couple of smaller losses, it's probably going to grow pretty rapidly, and we'll see where this goes. This is interesting. But the reason I bring this up, and I'm not just going to talk about futures probably from now on, is that this stuff is wild. I got to say, this is a very different trading experience. I don't know if that's a good thing, because I feel like it could become addictive, but it's a very different trading experience than just trading futures all day slowly. This is sort of like this is kind of like if you were a hunter or something, and you were waiting and stalking your prey, and then one shows up, and then you pounce, and it feels like that, and it's kind of interesting. So a couple of things I had to do here over on the right. If you want to do something like this in Schwab, you really can't just make trades and have these little confirmation windows pop up. It's really not gonna work for you. So what you do is you get the active trader up, and you go to the little configure buttons here, and you want to add the buttons for the TIF and buy ask and sell bid, and buttons for the quantity with buttons, and then this auto send button. You want that on there, and you want them to be on the top line. So first line, buy ask sell bid, quantity with buttons, auto send TIF. And the reason behind all of this is that I'm setting this up for extended hours trading, And there are a lot of different trade types. Like you can't just throw a market trade in extended hours. It won't let you do that. So so this buy, ask, and sell bid, they're actually limit orders, and they go by the number that's in this quantity box, and you can just immediately change it as you want. So it looks like you can change the numbers in here, so that's great. But it's instant when you do this. So all the other trading in this platform, you'll notice is kind of slow and clunky. But when you set it up like this and you use these buttons, you have auto send on, and you set the TIF to be the correct thing for extended hours, which is EXT. If you do buy, ask, or sell bid, it happens right away. It's just boom. It's just there, and that works. You can actually trade with that instead of using the sort of the other stuff. So when I was like back in here, I think I might have been in here. I don't remember. Yeah, actually, I think it was in this pullback. So I'm in here, and I was able to just click buy, ask, and it just popped in immediately, and then sell bid for the same number, and it gets rid of that position. I didn't have to create a closing position. All I had to do is sell the same number that I already had in there, and I made sure that I had this chart settings on here to show the position that I had that was open, so that I could see where it was entered and have some idea of like when I was in profit and all that jazz. You could also, if you built the position up, if you clicked buy, ask, say 4 or 5 times, and slowly were like as it was going down, you were buying and buying and buying. You could do that, which violates a lot of principles of price action, but that's fine. Then your position would show up on here, and you could, in that case, you'd have to kind of get a feeling for how many you wanted to sell. You might have to actually create a closing order in that case, but either way, you can do that. You could also create a closing order and maybe put the limit up high and sort of wait for it and then drag it down really fast if it looked like price was going down, and let it just kick in. You could do something like that as well. So there's a couple of different ways on this platform to try to trade quickly. I recommend, if you are on this platform, to set this active trader up like this and test it out with one. You can go in here with your keypad and just punch in one, and test it out with one share on an after hours thing. And make sure that you have this set for EXT and auto send, and just sort of see how it works by ask. And the other thing to realize is that you're doing limit orders. So if you buy here and this spikes up, you might not be able to get in. And you might have to drag the order up a little bit to get it to actually kick in when there's a little bit of a pullback in here or something. So keep that in mind, that when the market's moving fast, you're not necessarily going to get a fill or a complete fill of your order. So you're going to want to keep track of how many shares you have, because if you do get that partial fill and it never gets fully filled, and you have some weird number of shares like 235 or something, which I think will show up. Yeah, I think it shows up on here somewhere. There's probably a way to change that, but you'll want to punch that same number into here, into the quantity, so that when you hit sell bid, it just kills that order. Because the flatten button, there is a flatten button for this, doesn't work in extended hours either. So there's a lot of things you can't do with extended hours with this active trader, but this is how you would set it up to get in and out of positions quickly after hours. So this, like I said, this is a lot more exciting than futures trading, and you can really restrict yourself time-wise to when you're going to do it. So if you have a job, if you have a 9 to 5, especially if you're on the West Coast, it's going to be easier for you, because 5 a.m. is 7 a.m. when you could start doing this kind of thing, or even earlier. I think if your broker allows it. You could basically get up early every morning and have a couple, 2-3 hours of some intense stock action and be done for the day, and walk away, go to your job, do whatever, come back, maybe check it after hours, maybe not. If you can't check that kind of stuff from work or something, that's fine. But you can catch a lot of interesting things. So again, going back to this, how do you find these things? I'm looking for stuff that is changing after hours percent change greater than some small percentage. So I want to see stuff that's moving after hours. I want to see the shares value less than 30 million, probably even less than that. And then I'm just basically looking at the volume. I'm looking to see what people are piling into. What are they throwing their money at? Because that volume number is going to be climbing up rapidly. And then I'm looking at the news on something. I'm saying, more info. Go to the news. It shows up in here. Let's see. So there are differences between news. But like here's something where they're talking about presenting trial data for some drug to share top line results. So this isn't the results, but it may result in a rise in the stock. This is where the news isn't necessarily big breaking news, but it's also something that you have to judge. You have to look at it and judge it and say, well, is there enough volume? Like this one, maybe not, but is there enough volume? At the time you would have had to have looked at it. And if you actually look at that particular issue, it probably wasn't that great. Yeah, I mean this looks like it's excited, but it kind of petered off. And here's an example of why you're not actually risking your entire account when you're doing this. These things have real value, right? So you could have decided to buy in here. Whoops. Yeah, here we go. So this news came out saying, well, they're going to present this drug thing. Well, that's not the actual drug data, so maybe I would have thought that news wasn't good enough as a catalyst. But either way, you could have looked at this thinking, okay, well, I'm going to buy right here. This is going to go up. Maybe it could have. I don't know. And looks like there's a lot of volume at the time, but it didn't. It sort of dropped down, didn't go below this low, but then it kind of started to go up and then went sideways. This is an example of, it's probably time for you to get out. Somewhere in here you would have gotten out. Would you have taken a loss? Probably. Would it have been very big? Probably not. It probably would not have been a large loss here because there isn't a whole lot of movement. There was enough volume for you to get out, so that would have been fine, but not a lot of volume though. So you wouldn't have been able to get out with, $1 million or something. That would have been a little bit harder. It would have taken you some time. So you like I said, this isn't scalable. But 10,000, 50,000, probably fine. Getting up into, hundreds of thousands, 6 figures, 7 figures on a trade like this, no, you're not going to be able to squeeze in and out of there without affecting things. But my point is that if your risk is only what is this, maybe 5% or something, your possible gain is much higher than that generally, because when things go up, they tend to go up more than they go down on stuff like this. Like you'll notice this kind of went sideways. Now it could have drifted down, but you would have gone out earlier if it would have been doing that. So either way, you're still looking at maybe a 5, maybe a 10% loss. But this could have very well have turned into like that other stock I was just showing you, where it went from 8 to 20, which is way more than 10%. So the opportunity's there, and I think it just because of the way the stocks tend to move, that you're being put in a situation where your risk versus reward ratio is kind of it's not guaranteed to be good, but it sort of enhances it, I think, because the stuff tends to go up much faster than it goes down. You can get unlucky. I've seen a few of these where they pop up and they double in price, and then within like 30 minutes they're back down where they started, which is kind of sad. And that would be very disappointing. So again, you have to be on the ball with this stuff. You can't just walk away from it. And you're not going to be able to get away with putting a fixed order in the market or anything like that. You really have to eyeball this and get out. So this is not for the faint of heart. This is definitely by the seat of your pants day trading minute by minute. But But like I said, it can get very interesting. Where is that one I was just on here to? Oops. No. JFB. Yeah. It can get quite interesting, and there are, like I said, you can see there are some really wild moves. And now this one is a little bit more scalable. As you get up in price, what tends to happen in the market is you can put more and more money into a stock, but they tend to move less, right? So this kind of a strategy does scale in a sense, but it doesn't scale. It sort of scales itself into being more and more reasonable. If you were looking at something like this and it started at 20, then excuse me, then you could put a lot more into it. I mean, look at this. This is 100,000 shares in a minute at somewhere between 15 and 20. Well, that's quite a lot. You could have pushed $1 million in and out of this probably and gotten away with it. Smaller stock, and maybe not. So, but yeah. Anyway, so that's what I'm doing. This is interesting stuff. There are a lot of things about the Thinkorswim platform that I do not like. I think it's archaic. I think that it is clearly not designed for fast day traders in mind. I think maybe it was at one time the best platform, but I just think that it's been around for too long and there's probably too many features. They would do good to buy another platform, I think, to get a lot of their day traders off to. I mean, something like Robinhood or some of these other platforms are a lot simpler and very fast and easy to use for this purpose, but that's fine. I think this is doable. This is a usable system. I wish there was a way to buy max and sell max or something like that, where you could say buy as many shares as I have the money for something, and then sell limit on whatever my position size just taken was. Something that was fast and easy to do. It's not a thing. However, as you get more money into this account, you're starting. If you're starting with like $1,000 and you're trying to double it, fine. You want to go in and out on as much as on just one thing, one trade a day. Yeah, are you gonna have things that you make mistakes on? Sure you are. You're gonna have a couple of winning days and a couple of losing days, and hopefully there'll be some win out of that. But I think later as you get up, and even at that point when you only have 1,000, you don't have to take the whole account in one trade. You're stuck with settled cash if you're doing it this way, which means you basically, after you've traded with that $1,000, you can't trade again for that day. You have to wait until the next day. So once you sell, that's it. You're done for the day. So it does kind of force you to take better setups and not jump in on things that they're a little dicey. Just wait for the good stuff, because you're going to need that dry powder. But what you could do is you could split it up. You could take half-size positions and then leaving half of your cash to use later in the day or whatever. That's fine. And you probably do want to do that at some point just to keep your risk a little bit more balanced. So let's see, what else was I going to talk about? Oh, so there's also a big change coming in the markets that is going to really, really influence this stuff. And this type of trading that I'm showing you here might get really spicy. There is something called the pattern day trading rule. All right, so this has been around since the dot-com collapse. It's been around since 2001 or something, a long time back, and essentially what it says is that if you have a margin account, whether you actually have margin or not, just the account is of type margin. This is the type of account where the settled cash is just automatically usable. You cannot take a trade in and out on the same day more than 3 times in a 5-day period. So 5 business day period. So it really restricts what you're doing, unless you have over a certain amount of money, in which case the rule doesn't apply, which is 25,000. It really restricts what you're doing in terms of being able to go in and out on stuff, and so it's really reducing the volume, especially on this end of the stock market, I think, where people are more likely to do day trading. So I suspect that when they get rid of this rule, and they are going to get rid of this rule, the FINRA just passed the reduction in this rule. I think they want to move the pattern day trading rule down to 2,000 and maybe get rid of the limit and let the brokers set the limit. If the brokers decide to, it's going to be up to the brokers, but like if Schwab says fine, if you have a margin account with 2,000 and we'll just let you trade as many times as you want, which is, I think that's kind of unlikely because they're going to lose money on that, but they charge commission, but they may raise it. They may raise that number to 10 or 15 or who knows, but across the board, a change in that rule is likely to result in a lot more activity and stuff like this. We could get into some really wild moves. You might be seeing things 500% moves like every single day. It's possible that it could get really crazy. I think the amount of volume in and out is going to definitely increase, and especially on some of these low float stocks that are priced at, between $1 and $10 a share. You're going to see runs on them that you're going to see something that 10 baggers like every day. It's just going to be out of control, I think. So it's going to be interesting times. I don't think that rule is going to change right away. I think it's going to take it probably to the end of the year, or maybe not until the beginning of next year in 2026 for it to take effect. And again, it remains to be seen how it's going to be implemented, because I think they're going to try to give the brokers more discretion than they have in the past. If it doesn't change that much, or it's not that useful to me, like I'm still limited to 3 trades or something stupid, I'll just continue to use this cash account. If they open it up and they say, unlimited trades, $2,000 minimum, I may just take this and put it back in the other account that does have margin, and leave this as like a backup or something, for if I want to do cash only for some reason. But that would be pretty wild, because then, if there was no limit on the day trading stuff, like there normally is on a small account, then you're gonna enter long here, maybe get out, maybe enter again, maybe get out here, maybe enter long and hold, maybe either get out or wait and then get lucky and take this. You might get in and out a few times in here, and there's not really a reason to lose in here. Same thing. Yeah, I mean, you might have made 5, 6, 7, 8, 10 trades in here. Ridiculous. And made something the whole time. And then once you'd seen this big red bar, you'd probably say, okay, look, this is looking like maybe top-ish here, so maybe you would have avoided this. And especially after this big red bar here, you would have said, this is probably over. Probably not worth it at that point. But there would have been a lot of opportunities to catch a lot of this move, instead of just taking one trade and getting out and then being done. With your 25% or whatever, you could have, you probably could have gotten more like 50, 75, 100% almost on this if you had caught a number of these trades. So like I said, it's going to get kind of wild, I think, on the small cap side, if they change those day trading rules, and we'll see what that looks like. So for now, that's it. I don't know. I'll probably have I'll probably just continue to do weekly videos. So we'll see how it goes. Thanks. Bye.